You're looking to buy a house, and that's going to cost you hundreds of thousands of dollars. And what's going to be attached to that? A mortgage, which is also going to cost you hundreds of thousands of dollars. You choose your real estate agent, you choose your insurance agent, you choose your doctor. You probably should choose your mortgage lender too. So today, I'm going to equip you with 5 questions that I think are questions that you should ask to ensure that the person that you're talking to is the right fit for you. My name is Aaron Benton. I'm a local mortgage lender and host of this channel. Subscribe below, tap the bell for notifications so that you'll be the first to know when I release a new video. I get calls, texts, emails every day from people just like you looking for home financing advice. So whether you're looking to purchase in a week, a month, or even a year, tap the bell for notifications, subscribe, set up a call, set up an email. I can't wait to connect with you, and together we can build a plan exclusively for you. But today, we're going to talk about how you can choose the right mortgage lender and how you can instantly know if you're dealing with the wrong one. So stick around because we're going to get after it right now. So the first thing you need to do before you even start to ask questions, you got to find who you think could be the right loan officer. So with that, you got to look at individuals. Companies. There are companies who have 2,000 loan officers. In that company, there's going to be good ones and there's going to be bad ones. It is based on the individual. My company has about 100 loan officers. I would tell you that yes, there are many that are very good, but there are some that I wouldn't recommend to my family. I will tell you that. So it is based on the individual, it's based on their team. So don't fall in love with the idea that it is company driven. Yes, they can have a really good support, but you can have superb loan officers in small companies, big companies. You are looking for the right individual that can help you. Of course, the company will provide a good platform. So once you've kind of honed in a little bit on an individual, go and look at the reviews. What are people saying? Go to Google. You want to read, you want to look for the 5-star reviews. You want to see, did anyone leave them 1 or 2-star reviews? If so, what were the problems? Do the complaints kind of justify? Again, that comes with experience. If you have somebody who has no reviews, I'd start to question, well, are they doing any business? Would you want to trust a doctor to do surgery on you and that person maybe performs 1 surgery a year? Probably not. You probably want the doctor who is doing surgery on a weekly basis, just like you would a loan officer. They're in tune with the guidelines. So my first questions, once you start to hone in on a loan officer, this leads me right into my questions. First, how long you been in the business and how many loans did you do last year? You want somebody who, again, you're kind of just getting your feet wet here. You want somebody who knows the industry, has seen a couple things. They're going to be able to problem solve. They have experience under their belt. Getting somebody who is maybe clinging on to 1 or 2 deals a year, you're just asking for them to come to you and say, I made a mistake, I didn't see this coming. Again, maybe they're a good person, but being a good person doesn't mean that they truly understand the guidelines or all the things that are changing. There's so many different loan products out there between conventional VA, FHA, USDA, jumbo loans, state housing initiatives. You really have to be entrenched with it. So if you have someone who's operating this as a part-time job or they're doing something on the side, you really need to question, are they the right person for you? So those questions coupled with the reviews that you've had, that's gonna at least give you a sense as, can this person potentially be a good fit for me? The second question that you're gonna ask is, when are we gonna go over closing costs and when are we gonna go over rate? And I can tell you, the person who's kind of pushing all of that off, not to tell you what the closing costs are, not to tell you what the rate is going to be, that's a red flag. They need to be upfront and honest. Now understand, interest rates can of course move. But in terms of when I talk to a client, I will take an application. It can be over the phone, we can talk about it online. But once I get an application, I can understand their income, their credit scores. I jump right in. I actually send them a mortgage coach presentation that is recapping the numbers that we discussed. It's going to include the closing costs and it's going to include the monthly payment and the interest rate. Now understand, interest rate can change with the market. So if you don't have a house and you're not under contract, then yes, the rate can move. But it would be really nice to get a feeling of what that upfront cost is going to be. I encourage you to shop local because at least in my neighborhood, I live in Bluffton, South Carolina, and in Bluffton and Hilton Head neighboring towns, you have upfront transfer fees, you have monthly HOA fees, you potentially have flood insurance, you have condo fees. You want to know this information well in advance of signing a contract. So the local person's going to be the first one to know what are the costs, what are the pitfalls, what are the right questions to ask. So they're going to be able to really kind of weave you through and give you, yes, these are the closing costs. Yes, there is a transfer fee. There is a capital contribution fee. There is an HOA fee associated with this. That way, you are avoiding a lot of surprises that could arise for someone who simply doesn't know the area. So ask about the closing costs up front. Ask about when we can discuss rate. Another question, the third question, how long does it take to close a loan? You need somebody who has a team who is nimble and fast. Many times in this marketplace, I'm getting contracts that are 30 days or less. We can't simply say, we can't do it. If someone comes to you and says, it takes 45 to 60 days to close a loan, it's a red flag. Why are they going so slow? Do they have a part-time job? I mean, what is going on there? So understand that speed, time is of the essence. You want someone who's going to be able to close a loan in 30 days or quicker. Now, if it's a renovation loan or there's some sticking points, your loan officer should be able to share that with you of why they can't close so quickly. So understand, yes, some extenuating circumstances, but you should be able to close really quickly. And if you as the consumer are upfront with your documentation and responsive, your lender should be able to turn your documentation around very, very quickly, get you a conditional approval, get your appraisal ordered, order your title work from your closing agent, and really get that ball rolling. I tell my clients all the time, the bulk of the work that is done on our loan or their loan, it all happens within about the first week. Moving is stressful enough. Moving is stressful enough. You do not need to be there at the finish line worrying about, is my loan actually going to close? Those loose ends should be tied up in advance. Take care of those items up front so that you can focus on moving and making it a stressful situation just a little bit less stressful and more manageable. Another question, the fourth question, at what point can I lock in my interest rate? Well, we have product that is kind of a lock and shop where you lock the rate, you go out and you shop, but that product has become very expensive. I wouldn't recommend it. Many times you can lock in an interest rate in 15-day increments all the way up to, at least 120 days, sometimes 180 days. I will tell you, the longer that you lock the rate, the more expensive the money may be. So many times you have an option, or if you ask, when can I lock my rate? If you have a contract and a set closing date, the idea of locking is most likely available, and you can have that conversation with your lender. They should be able to articulate with you, this is the rate today, this is potentially what it could be. Now, you might not lock in your rate, and that's okay. You can talk about the market. Your lender can share with you, this is what we've seen in the past, this is potentially where the market is going. Again, no one has a crystal ball, but it would be nice to at least have the conversation of seeing where you stand. I'm gonna give you a horror story. I lost a deal. I lost a deal about 3 weeks ago. And what happened was, I had an interest rate and the competitor had an interest rate. And they weren't local to the market, so they are faceless. And I lost the deal. And what happened? 2 days before closing, I got a call from an attorney, and the attorney asked me, well, how in the world is the borrower now being charged $6,000 in points? They say this is the first they found of this or heard of this. So I'll tell you what happened. The online lender was floating the interest rate all the way from the very beginning in the loan estimate stage to the end. They locked the rate with 3 days before closing, the last possible time, because you got to get the closing disclosure out. They locked it, they charged them the points, the $6,000, and what happened? The client's hands were tied. What are they gonna do? They're gonna say, I'm gonna go get a different lender, or are they gonna close? Well, they ended up closing, and unfortunately, they thought they were saving $600 by using the other lender. It cost them $6,000 in points. So no, when you're reading the loan estimate has to be disclosed to you 3 business days after going under contract. And with that, in the top right-hand corner of the loan estimate, you are gonna see, is your rate locked or is it floating? If it's floating, it can move with the market. So if you get a disclosure and it says that your rate is floating, you probably already know, okay, I've had that conversation with my loan officer and I know the interest rate can adjust. I have people who float all the time. They think that the interest rate is going to get a little bit better as time goes on. So those individuals are floating. I'm not forcing it on them. They are openly choosing to float their rate. Likewise, if you get a disclosure and it says that the rate is locked, they had that conversation and they told the loan officer, lock in the interest rate. I want that variable to become fixed. So very important to have that conversation of when can I lock, when can I not? If your lender is running away from that question and is trying to dodge any questions surrounding rate, you probably need to have a little heart-to-heart and maybe you need to look elsewhere. Number 5, does your lender participate in any kind of realtor marketing? So yes, some lenders do go on joint ventures and things of that nature, but you need to recognize, are you getting referred to this lender simply because there is a pay-to-play or a financial incentive? I hope not. You want to have the choice to choose the absolute best. And I think you can ask questions. How did I end up on your desk? Is there a relationship between you and the real estate agent? The answer should be no. There is no relationship. In fact, they refer me because they think I'm going to do a bang-up job. They think that I'm going to be able to exceed your expectations, and they feel comfortable and confident that not only are you getting the best situation for yourself, you're going to be able to close in a timely manner, and everything is going to put you in a very positive position. So it's all out of good faith that the lender is being recommended. So those are my 5 questions of how can you really analyze, is this lender the right fit for you? I encourage you, reach out. You can ask me any question you want. The questions that you come up with, I wouldn't go on to ChatGPT and basically say, well, what questions would I ask my loan officer? I don't think that those are necessarily the best questions. You start asking questions about what was the APR last week? I can tell you that. But is that relevant necessarily in our conversation of deciding what is the best loan product and am I the best fit for you? It's not. But nevertheless, I think these are 5 questions that really help you zone in, is this person the right fit? Of course, I love to talk to you and see if we are the right fit. I certainly hope so. Again, my name is Aaron Benton. I'm a local mortgage lender and host of this channel. Subscribe below, tap the bell for notifications so that you're the first to know when I release a new video. In the comment section, maybe you want to give a little input. Have you had any horror stories? Have you had any good experiences? Are there any recommendations? I really want to use this channel as a platform for education, and I appreciate you listening and sticking around to the end. So I hope to one day get to meet you, but if not, I hope to at least get to see you on the next call.